again, everybody. It's Harry Boxer, the technical trader at TechTrader.com. Well, this is the charts of the day, of course, and it is Tuesday, but it wasn't turnaround Tuesday. It was turned down Tuesday after a couple of really big days of rallying. I posted something on the site I want you all to read. It's kind of relevant technically about back-to-back big plus days and what's followed. So I think tomorrow is a very important day for the market to, should I say, the bulls to show what metal they have or what they have left in the bevy of ammo. But you can see today, gap down, run down, and go sideways. It sure looks like a bear flag to me. At first, I thought it was a base. But in the overall structure of things, on the hourly chart on the S&P, this is what I wanted to show you. When you have a big decline like we've had on the order of 10%, maybe 11%, and then we get a big snapback buy through the moving averages. Moving averages cross over the stock or the index pulls back. This is key. For me, when I see the market pull back in this kind of a mode, either this is a V bottom or right hand extension, and we hold it right here and gap up tomorrow. And now tomorrow is going to be very important, of course, as well with the FOMC, and it's going to be interesting to see what they have to say, what Powell has to say. But if we can get above 5,700 and then 5,750, we have a real big chance of a much bigger retracement back to 58, 50, 60, and do more of a 50% fib. My problem I have is that if it comes down and breaks immediately or gaps down and takes out that low, we're probably headed to 5,400 give or take, something like that. So 5,450, 5,400 zone would be my target. I'd hate to see that, but there's ample room for that to occur. So let's get to it. I'm going to show you just a few longs, and I'm going to show you a bunch of shorts that, to me, if we do break, are ideal candidates for a short-term short trade. And I'm not advocating that because we know we're pretty, long in the tooth to the downside. However, when you look at the McClellan oscillator, you'll see we closed. And if you look at obviously a one-day daily chart, so we popped out of this declining channel over the last couple of months, but immediately backed off. Now today was kind of an inside day, so the market can still go up. If we break down, that's going to spike to 150. If that's all she wrote, and we come down again, and the market rallies, that all well and good. But for now, I'm not trusting this pattern. We had this kind of a pop here for a day or two, then a pullback, and then we had a 1, 2, 3, 4, 5 wave advance in the oscillator. This could be just wave one. It's a tough call right now, very tough call. But let's get to the charts because I want to show you just a few longs and some really interesting shorts too. On the long side, NEXT and a beautiful long-term channel has been going trading in a range between 4 and 9 for the last 3 years. After spiking in January and reaching a nominal new all-time high at 947, it came down and bounced sharply. Today was a big day for it, up 18%, $1.30 to 855, 4.6 million, which is a strong line for that stock on the breakout day. Now it went through 3 moving averages and a declining tops line after holding this trend line. I don't know if that is the ideal trend line, but right now, if that is the case, then we're looking at 10.5 and 12.5 as potential targets should it break out. So keep an eye on that one. NIU, the auto manufacturer and a sleeper in China, really has come on strong the last week. Look at this move. From a low of around 230.35, it went up to over 422, and nearly doubled in a week. More importantly, this is a 2-year base pattern that has shown the ability for this market, for any stock, I should say, to really start to ramp up. And this, although it's short-term oversold, any pullback consolidation in this area might be watched carefully for a move to near 5. And then beyond that, you have a much bigger move. Let's take a look where the stock was back in 21. How about almost 50? So it went from 50 down to under 2, built the base for a few years. Now it's breaking out. RGC run a monster day today. This stock spiked 3 days ago, held, and for the last 2 days has been running again. Today, trading 3.8 million shares. It's a thinly traded biotech. Look at this chart intraday. In the last few days, it's had a big run up, pull back down, held support and the trend line right there. And quite frankly, if this breaks out again, with the momentum this has, above say 34.5, it could run it to the 50, 60, 80 range. Not kidding. So keep a close tab on it, and keep in mind that support is about 25.5, and then about 22. TIGR, Chinese stocks, very strong. Take a look at this. Spiking today, 22% on 32 million shares nearly, breaking out of a base pattern. And now if it fills that gap, targets 11.5 and 14. And finally, on the long side today, TNXP, after popping 2 weeks ago and then forming a little tight pennant, it's been up for 4 days in a row. Today popped another 292 or 18%. It's thinly traded, but it did trade 2.6 million. And your next target would be the gap here at 25.5. That's your next target. So keep an eye on that as well. Now on the short side, quite a few stocks to sift through. And so I came up with about, I want you to take a look. Yeah, about 20 of them. ALAB. Now, I've been talking about this stock for months, and I told you when it broke the channel with a breakaway gap and then had a rising wedge, it was an ideal short opportunity. So, and certainly that thing rolled over from 109 and got down to 60. Now, this is a bear flag in wave 4. To me, it's a 1, 2, 3, 4. I think if we get any kind of bear phase, even short term, this could collapse into the $50 range or less. So looking for 10, 15, 20 points to the downside, and a tight cover. If it doesn't work, back above around 74, 75. ANF obviously been down ever since we noted it broke down in January. Just kept dropping, hardly even forming any bear flags. Now the recent rally took it right back up to the gap, and almost an engulfing reversal day. A downside target for me is 66.7. KAVA, been talking about that for a couple of months. After it broke here, rallied back, formed a kind of a left shoulder, head, right shoulder. There's your neckline break, and there's support break. We're at third level of support. We might bounce, and if we do bounce and the market bounces, this is still a short opportunity in the 90-95 range. But if it breaks underneath key support, going back here, there's a triple bottom here. If KAVA should break underneath, let's call it 74, it could run down at 60 pretty quickly. EVR, a big long rising channel, breakdown, snapback. Here's where it failed for sure, under this. That line took out this support zone with a crushing decline and then barely bouncing. I do want to point out that this one, Evercore Partners, which had gotten up to as high as 323, has dropped in half, basically, nearly, down to 185 range, and now forming a rising bear wedge. I don't think it's done yet on the downside. You got to be careful, though, when the stock's down this much, you could rally back even further. Anything around 215, 20, 25, a low volume would be a possible short. Where's the next target? Well, you can conclude that with support down in that range, that probably at least down to about 175. EXPO broke a channel and came down hard, rallied back to resistance. You can see it's now below support and might see another run down to 78 or even 74.5. FIX broke a top, hard down, rising wedge, another hard down, and then another rising wedge to resistance, and a reversal day today. I think it's ready for another move down to 270.75. What a nasty looking chart. FRP Fresh Pet has gotten hammered with a spike down bear flag, spike down bear wedge, another spike down bear flag. Look, usually 1, 2, 3, 4, 5 gets me out. And that's what I would still give you counsel for. But if it breaks again and this pattern breaks down, and you can see that it hasn't even come across that line at all. So therefore, the trend is your friend. The trend says down. I don't know how much more it's got to the downside, but I can conclude or project the possibility that we see $70 or less. Wow, that's ugly. Front door, not too much better. Break of the trend line right there. Break of lateral price support. Secondary break. Gap support broke. Third level right down here. And this was an engulfing reversal day today. This looks really bad. And I don't know where this is going, but I can tell you that these multiple lows down here might be a target zone around 30 from 37. GoDaddy, this is a tech trader swing short. Any day now, I think it cracks. We'll see. But this is a definitive breakaway gap to the downside, broken trend line, and a bear flag for about a month now. If that breaks, we're likely to go to 150 from 177. Glaucos, long-term rising channel broken with a gap, not even a bounce until just recently. But it still looks lousy, and I would give you a target 85 from 100. Wow. KBH, now another home builder that looks lousy with a head and shoulder type top, breakdown, snapback failure, another snapback to the trend line. And right now, home builders really look bad to me. If they break below, if KB goes underneath 59, I'm looking for 49.50. KKR, obviously the big investment banking firm, Colbert Kravitz and Roberts, broke down from a long-term uptrend, from the little bear flag and now bear wedge. So it looks to me like a 1, 2, 3, 4. If that's the case and we get a fifth wave down, we're looking at maybe mid-90s, maybe less. Another home builder, Lennar, looks similar to KB and DHI and all the rest. Needless to say, I'm looking for lower levels near 105 or less. It's 120. And Louisiana Pacific, and a lousy looking, well, beautiful looking long-term rising channel, broken, bear flag, snapback failure at the trend line. Look at today's action. Now, it did snap back. So something to watch, because I think it does go lower. But you want to stop this one over like 97, 98. Downside target, 80. Lululemon's a tech trader swing short after breaking down a bear flagging. We went short. The stock now dropped, retested, dropped again to the target zone, testing about 305, and snapped back to 323. I still think this has more downside, maybe to 275. Impinj, which is a tech trader long for a long time, and we did very well with it, broke down bear flag, another bear, and this is where I said you may want to consider shorting it. It then dropped from 170, 100 points down to, well, 90 points down to 84. It's in a distinct downtrend. I don't know how far they take it, but it's already, just to give you a reminder, from 240 to 84. A huge drop in about 6 months. Does it have more downside? Well, if market pressures persist, we might see the stock at 75. Might be a bargain down there. STRL, construction firms starting to break. Engineering construction firms have beautiful rising channels, but with the possibility of a housing slowdown, and this broke bear wedge, large bear wedge. I'm now looking for 895 and 80 possible in this one. It's now 118. Keep an eye on sterling on the downside. United Forest Products, now UFP Industries, massive top, and we broke. Today was a significant day to the downside. It's a drop 504, 470, but it's the lowest close on this stock since way back here in 23. So it's a 2.5-year low. I can see the stock getting down into the 90 range. UTHR breaking a key top and forming a large bear flag, or whatever you want to call it. You can easy stop above, in my opinion, about 327, but the downside targets are 300, 285, and 270. WAB, Westinghouse air brake, large rising channel, broken, unable to get back through. It's forming some sort of consolidation pattern in here, but I would hesitate shorting until I see a break of 173. Then I think you can see 160 and even 150. And finally, Weatherford, which has been a tech trader short since way back here when it broke. Let me remind you, this is the pattern when I first gave it to you. Broke down from the bear wedge. The volume technicals look terrible. So he issued a short. I think it was about 110, 109. That's right. It's dropped from 109 to 50, 51 and half, and then some. Doesn't look done yet, though. If it holds here, great, but it might see 42 in that area before it's over, especially if the market goes lower and we get a spike down in a lot of these stocks. This could fall apart. Nevertheless, that's it. A quick review of something like 20 shorts, about 5 longs. And folks, this is the time to be ultra careful, a little bit more conservative. Don't take big risks. I'll let you know when I think the market's bottoming and or giving me a signal that we've had a massive turn to the upside. Could happen tomorrow, could happen next month. You just don't know. You got to play it as the market gives it to you. And that'll be it for now. This is HB out. Have a great evening. Bye, y'all.
She doesn't bring it back. I'll think that I will die. She took it.